All right. Good morning, everybody. This is John, and welcome to our planning and scanning. This week, major things occurring. It's the end of the month, number one. Number two, we have big earnings out this week, starting with this morning before the market opened, Biogen, Merck, two big pharmaceutical biotech companies, respectively each. Then after the market close, I think what will trump those reports is Apple will be coming out. Seagate Technology today after the close. This week we have a lot of energy companies, British Petroleum, Valero, Hess. We have Exxon Mobil out this week, which Exxon will be on Thursday. Tomorrow we have Yelp, Take-Two Interactive, Baidu coming out after the close. Then on Wednesday we have another NASDAQ 100 component. Starbucks comes out, Metropolitan Life. So there we have Allstate and Insure. A lot of different names come out, big names. 20 to 25% of the S&P 500 will report this week, and this will be kind of like the end of the peak of earnings seasons for us here in the States. Next, we have a two-day Federal Open Market Committee with Ben Bernanke and team. We're going to be looking for that release of that announcement Wednesday. Thursday, of course, would be without a doubt, Halloween. So we'll be dealing with not just Halloween, but the end of the month. So people will be looking at what's going on for the end of the month charting analysis. That'll be very important. Friday brings us to our monthly unemployment report. Saturday brings us to daylight savings time here in the U.S. So believe me, there is something here for every aspect of a trader. So it was a pleasure to be up in Toronto. We had a lot of requests. We did is we announced that we come in here every Monday for planning and scanning, and we invited a lot of our the folks that were at the Toronto Money Show to come back in, see what we do. Since this was the last week of October, we said come on in, see what we do every Monday through the month of November. So hopefully you come back. The reason we record this is, as I mentioned prior, a lot of people can't make the Monday morning, so we record it, we send the link out, you can see what we had to say. All right, so the first thing that we like to do is to take a look at the health and breadth of the market and looking at the S&Ps that overnight, this is the futures, this is an advanced decline analysis on just the S&P. This gives us our breadth analysis on the health of the S&Ps alone, and this is the volume. The volume level on this last rally, we've seen, you know, a lot of people are kind of perplexed when this thing's going to kind of peak out. And I would have to say that we've been a little bit cautious of the market. We've got this move up here near monthly pivot resistance. We've seen some decent participation by the advanced decline. Unfortunately, there is one little thing that has not happened with this. We have not seen a pickup in enough volume to see if this move is sustainable. So the question begs, at what point do we see a potential reversal? Well, it makes sense that anyone's been long this market before we have all of this hitting in our face, before Ben Bernanke is to take something off the table, because we have seen a lot of tremendous moves in the market. The one that's been the most aggressive mover this last 4 weeks has been, of course, the NASDAQ. The NASDAQ, looking at, and this is a daily chart, and again, this is the advanced decline, we did see a breakout on the NASDAQ 100 of the advanced decline, but over the course of, say, and I'll get this up so everyone can see this correctly, over the course of, for the last 5 days or so, we saw higher closing prices last week, but we did not see we have a potential divergence in the advanced decline. We don't have a particular sell signal, but Friday's price action in the NASDAQ left us with a doji. Today's price action in the S&Ps leaves us with a doji. More importantly, I think the big warning shot across the bow would be that this move that we've seen, we have a major bearish, and I hate to say this, but we do have bearish divergence on the on-balance volume indicator. And so with this type of move, granted, someone who's trading futures may not be able to finance the trade in the leverage, but I think between now and the November expiration, we will see at least a correction back into this area once we get a little bit of a sell signal, because the catalyst to bring this market up, number one, has been most of earnings, number one. Number two, we do have a little seasonal trend in the NASDAQ, which we start to see a little bit of a decline from the end of the month going into mid-November, which would make sense because the The next option expiration comes in for November, and I'm not talking weeklies, I'm talking the next monthly calendar option expiration event comes in for the 15th, that Friday. So you literally got 3 weeks left to the next option expiration. So I'm thinking that in here, depending on once Apple gets out of the way, we have this little doji formation. We did get near that monthly pivot resistance, quarterly resistance. Quarterly resistance was way out of the range of the ballpark, but this volume is a major concern for me at this juncture, especially on how the market ended for the week. So with that said, let's take a look at the weekly chart. The weekly charts are very strong. In fact, possibly too strong. Looking at the advanced decline on a week-to-week basis, they're a little bit different than the daily because, not to give a technical lesson, but they're calibrated at the end of the time period, so from one week to another week. So you need to address what the day-to-day is and compare it to the weekly. And so for right now, when I look at this substantial market move, the rate of change that this market has taken and I would have to say the lack of volume that has transpired in the last 2 weeks on this rally suggests that we're not at a sustainable pace in the NASDAQ. One of my arguments is that I think that the market is still going to see a sector rotational correction, and so therefore we want to kind of focus in on areas of the market that have not seen significant movement. Now, there are several which are starting from a relative strength perspective to take shape, and one segment of the market is more defensive than anything, and it's utilities. And in the last week, utility stocks have started to outperform other segments of the market. The other strength or leadership of this market has been the small caps, which is a very aggressive playing market. People will invest in technology and they will invest in small caps when they're aggressively bullish the market. Now, with that said, is this market movement? And so when I take a look at this chart here and I see the area of rally or the peak prices that we've seen in the marketplace, and I take a look at the advanced decline, we finally saw a breakout of higher highs at this level. Unfortunately, we didn't see a movement corresponding with volume in that market. Okay? So, with that said, it is important that I just wanted to make sure that everyone, if you cannot see your screen, do not post in a private message, please. What you need to do, we have moderators here that will help you out. Please post it in the general chat so someone can help you. You need to refresh or log off or log in. But the charts are being projected. There is sound and there is visual at this point in time. So what you need to do, you just need to post it into the general chat, and we will have a moderator help you out. So with that said, as you can see, looking at these peaks in prices, the pace of the move to this area in the Russell, we've started to see kind of like a little bit of loss of positive momentum. On a daily basis, we're not closing closer to the highs, as you can see, number one. Number two, we are starting to lose that aggressive bullish formation. In other words, we're not making higher ranges or larger ranges in the market. We're starting to see diminutive or smaller open-close relationships. Just like most times when you get a rally, right? Look what happens when you get into a corrective phase of the market. You start to lose that that aggressive higher high, higher low type of situation. With the advanced decline, it started to pause here. We haven't seen an aggressive move. And again, the big warning shot for me is the lack of volume on this move. So I can definitely say without a doubt that we are starting to see a lack or a loss of momentum. Now notice with the Russell, we are gaining towards or closing in closer to the monthly person's pivot resistance. That was formulated at the end of last month. So I'm starting to see some money coming off the table, both in technology names as we start to wind down the earnings season, as well as the Russell. So now let's go over and look at the NYSE real quick. The NYSE had this year was really a perplexing situation, as most traders only have access to advanced decline on the NYSE Composite Index. That's what's generally reported. That's what most platforms show. And just like we saw with the other two indices, lack of volume on this market move. So clearly you could see on the last rally, clearly as I share with you, from this peak in volume, from this last peak that we had in price, we've seen a higher price move last week, but it didn't come on an acceleration of volume. It did finally come on an acceleration of the advanced decline, but the question now begs, has this been just an accelerated move through the top, a final push? So the fact that it's not been on any volume, we need to watch this for the next couple days. But I can tell you it also came very close to, and it is near, its monthly person's pivot. So I'd have to say I'm more cautious on the market now than I have been in recent weeks. And as I talked about in Toronto, I said, listen, it's important to see how this market closes, not just the day, but also the week. Now, the diamonds, the Dow Jones Industrial Average, on the diamonds, it too has had a very dismal market breadth. It's had a very dismal volume association. Market breadth, as you can see, we've not moved. And that doesn't mean to say that it can't finally move up with its brethren indexes. What the Dow represents is the blue chip of blue chips, the high dividend yielding stocks. And so when people aren't investing in the Dow and they're investing in the aggressive, they're investing in the high tech, they're investing in the small cap, they're more bullish. When we lose that rotational effect in the market, then people are going to put the money they've earned, they're going to take some asset allocation. So if you're in 1 million shares as a fund on Priceline, if you're in 1 million shares of Google and you've seen a substantial move of 10%, you may adjust your position by removing 10% of your portfolio. You still have exposure to the market. You're going to take some of that money off the table and you're going to put it somewhere. Where would you take that money? So that's what my job and your job as traders is to figure out where we are going to put that money. So when I go to planning and scanning, the first thing I want to do is I want to look at not just the S&Ps. I want to take a look at the NASDAQ. I want to take a look at the Russell. I want to take a look at the Dow. And I want to say, how does the health of the overall market look? In addition, now I want to take a look at my scans. And my scans revealed this week that when we took a look at, many of you might not be familiar with the high close doji formation, but this is a scan that we created for a weekly basis. When the market, after a downtrend, we formed dojis. The high close doji rule suggests that after a period within 3 bars after the low of the doji is formed, the bar that closes over the high of the doji generates a triggered buy signal. So the interesting aspect is last week, this is a company, Ensco, it's in the oil, gas, drilling segment. Notice that it has and this week we have a lot of stocks in that sector, as I've already mentioned. British Petroleum, Valero, we have Hess out on Wednesday, Occidental Petroleum, again, those were Tuesday. So, but we do have a situation where the seasonal trend is typically down in this segment. And guess what this stock has done? It has been following its seasonal trend in the market. But we finally got a very nice push to the upside last week in the market. I want to jump your attention over here to the daily charts, which the daily charts, this probably wouldn't come across anyone's radar screen, because if you think about it, looking at where the S&Ps are, looking where the rest of the market is, this is a dog compared to Apple or Priceline or LinkedIn or Tesla, or the list goes on and on and on. but I definitely want to say I'm very impressed with this name based on the volume of the accumulation of this market that's moved sideways, and all of a sudden we had this significant pop. This chart down here below, this is a relative strength comparative analysis between this stock and the S&P 500. This stock, by the way, is in the S&P 500, and it has just started to outperform last week the market. So from a relative strength comparison, this stock is probably on most institutionals' radar right now. So the question begs, do you buy a breakout of this stock at 57 bucks when the thing was trading at 54? No. You'd look for a pullback in this company because I think this segment, if you notice here, we still see some seasonal weakness that comes in the market. So it might be some dead money, but I'm very interested in this name because it had a weekly high close doji, tremendous volume to the upside on a daily basis, but also look at that weekly volume. So if you take a look from where we were several weeks back and then look at the recovery of volume in a very short period of time, in the last week, people were selling this, liquidating this stock, but they came right back into this name. Looking at this stock on a weekly basis, looking at the long shadows here, looking at these buying tails or wicks coming in here with that doji, notice that even though we made lower lows in this company or in this issue, it didn't stay there very long. So I'm thinking if we are to see a bullish change in this name or this segment of the market, guess what? We should see higher lows prevail. So I want to set what we do here at Planning and Scanning is we set alerts. And what I want to do is set an alert for a snapback sometime this week. So look, we do have time in this trade, but I want to set a snapback for this market. And I would say set an alert. Let's go with an alert at approximately 55.20. That's not an alert to buy, but ESV is an alert that if we get an alert to buy this name or 55.20 gets a pullback hits, that means we take a look at this stock. So we're going to set a trade alert at 55.20. Now what we do at Planning and Scanning is my partner, Butch Heading, who runs the day trading aspect of our business, every single day we'll send a tweet out. So you want to get to sign up for the tweets. And we can, if you stick around, we'll show you how to do that. You just go to our main website. If you just go to the main website at personsplanet.com, we can get you a, and I'll try to get that up right now for you to share with you real quick. Okay, so if you go to personsplanet.com, and right up at the corner, you click on the tweet right up in here. You'll notice here are the tweets that we send out. You'll find they're pretty important, they're timely, and it's exactly what we discuss in the market. And I think if we talked about Microsoft, we talked about ELX, Netgear, all the segment of the market. So I just wanted to make sure that if you definitely don't know about that, you can sign up for those tweets. This week, we also had another name that I think might be important for everyone to check out is in the regional bank sector. Now, this is not sexy, and I'm not sitting here saying that should we ignore the weekly options, should we ignore weekly stocks in the market, but remember, when you trade weekly options, there's only less than 300 names that you could trade off of. And I think it's kind of a crapshoot. And with today, with the implied volatility, we might have to take another look at Apple, but another time. But I think that some of the names that are coming into this space, especially this week as we get into the month of November, depending on the FOMC's announcement, regional banks have been on fire, and they are still performing well. So in this space here, BB&T, but I like this name a lot better, and I'm going to tell you why. Because we went over this stock, and I think from a trader's perspective, this is Pulte Homes. And as you can see, we already did an analysis on this a few weeks ago. And what the analysis is simply this. This could be, a lot of people might see this as a shoulder, head shoulder. Now, it's a head and shoulders, or if it breaks out, if this breaks out, this is a failed head and shoulders top, which is not a head and shoulders, but rather a continuation pattern. Look at the seasonal tendencies on Pulte Home. It starts to bottom out. And also look at the volume analysis. I want you to take a look at from this peak in price on Pulte Home. If we take a look at Pulte Home, you take a look at this peak in price, look at that decline, right? So we went from approximately, let's call it $24 down to an average price of $15. Look at the amount of selling pressure that took place. Hardly any. It was on very little volume. So when the market goes up a little bit, you see a bigger increase in volume on the up days than you do on the down days. So with that said, this is, again, a weekly chart. We generated a weekly buy signal a week ago. We generated a high close doji this week. Pulte Homes announced earnings last week. The market is up. Watch Pulte Home for any type of a pullback. I think this is another low-risk situation, especially if the Federal Reserve is out there to help the little guy, help the housing, help keep interest rates low. Pulte Home might have a strong benefit. I like this because it's a potential reversal formation that could fail. A reversal formation in the sense that a lot of traders may think that's a head and shoulders top, and they got short looking for the market to go down, and guess what? It's not going down. If it takes out the highs and you see a continuation, then you want to look for a pullback to around 17. So we're going to set an alert here for 17, and to enter a long position, we're going to look. And that was the opening bell on my headsets in my ears. We're going to look for a buy here at around 17. And when that alert goes off, we will send that out. But we have a very strong seasonal tendency for this market to move up. This is an exciting pattern. I know it's not a big name, but I'll tell you what. Another name that I really like is Cisco, which is the food giant distributor. It has a very strong seasonal tendency. The only problem I have with Cisco is we don't have the volume in this name yet. But let's look for a pullback on Cisco, SYY, at 32.50. We're going to look for a small pullback, and we'll see what happens there. We'll send out some tweet alerts. All right. So now with planning and scanning, we wanted to take a look at the health and the breadth of the market. We wanted to take a look at some stocks. Tomorrow morning, for those, we will go over this again, and we will send those tweets out. And if, for example, we get some special news that comes out, we will post this on a tweet. So make sure you sign up for those tweets, number one. Number two, we want to make sure that everyone here, if you're looking at thinkorswim, real quick, how you run a scan for this is you go over to thinkorswim and you hit the scan criteria. And the next thing you do is you want to go for what do you want to scan in. So we're going to go to select energy right now, okay? So if I select energy, I'm going to select all energy. For example, volume. I'm going to change this volume. I'm going to leave it up to about 500,000. And then I'm going to go down here to it says add study filter. And I'm going to look at under, if you click under here, it says license study. And basically you want to look for license study, and you want to look for PPS buy signals. That's person's pivot study buy signal. You click on that and you hit scan. So we're going to see what happens on a daily basis to see what stocks pop up on a daily feature under the PPS, the person's pivot study on scan. Under daily buy signals in the energy sector, nothing came up. Let's do this on a weekly basis. So you can run it on a weekly basis and you hit scan. So right now, thinkorswim is scanning for those buy signals. As you can see, the meter is running. It's scanning, it's scanning, it's scanning. Nothing's come up in the energy sector. You go down here, you go to public, you can go all the way down to S&P 500, hit scan, and it'll tell you what scanning criteria are going to come out for the week. Now here's the problem with thinkorswim. If you don't run this at the end of the week, right, it's not going to give you, you had to do it on Friday because it kind of refreshes. So there is some bad news to running the scans with thinkorswim. So right now it's not telling you that this is a buy signal from Friday. It's telling you if the market closes here on Bristol Myers BMY, it's going to give you a buy signal. So if you take a look at Bristol Myers real quick, we go to BMY, you'll notice that BMY on a daily basis, let's take a look at this chart. You see that? It's generating a daily buy today, but it's at predicted monthly resistance. So it's had earnings, the market bounced up, and guess what? It's not a company that I would be looking at actually buying in here. Merck, if you take a look at Merck had earnings and it gapped lower. So right now, we would probably, since we're more interested in what? Seeing the health of the market and seeing what is forming in technology and small cap, and since we saw a listing of stocks that are a listing of stocks, for example, that in the S&P 500 or in the technology space, and we can go to industry and we can go to information or just select all information technology, and I can run a scan for the day today, and at the end of the day run another scan. I can either do it for the NASDAQ 100 or I could run it on the Russell 2000. So if for example, our planning and scanning shared that the Russell 2000 may be running out of steam, right? What will happen is you're going to start every day, you run an end-of-day scan, and it'll share if we've got any major sell signals in the Russell 2000. And you can find that within thinkorswim's program. So I hope you found an interest in what we do over here on almost a daily basis and what we do from planning and scanning on a weekly basis. We look for stocks that have low risk, that are under people's radar, and we try to focus in those rather than the hot and heavy ones. So this is a planning and scanning for a week to give you an idea of what the health and the breadth of the market is, what events are coming up to take place, and a couple stock names that we could sit there and focus in on for the week and over the next course of the next couple days. So with that said, I also wanted to mention the Canadian dollar, since I was up in Canada. Wanted to put up the Canadian dollar real quick, and let me get my trade station and put this into Zoom here for you real quick, because this I found very interesting from a perspective, since we had you guys had the Bank of Canada came out, downgraded the GDP in the market. Now, looking at this system, you notice that we've had some pretty wild swings in the Canadian dollar, and so when we take a look at the daily chart, it generated this huge, massive decline 3 days ago. Any rallies that we might see into our moving average, but more importantly, let me look at this weekly chart with you, because this is kind of an interesting formation and situation. When we take a look at this, the small speculators were actually short this market. As you can see, yellow is the small speculators. The commercials and the hedge funds, if you notice, they had really adjusted their positions. And so right now, the small speculators have got long the market last week, and last week the market just completely crashed and burned in their face. So with that said, from a Canadian dollar, typically you see these big weekly bars, and what you'll see is sometimes you get these weekly bars, you get snapbacks into the resistance level. I think that this is more of a potential continuation to the downside in the market, and so any rallies back this week, the first test of resistance this week in the Canadian dollar, now this is the futures, keep that in mind, but I think any potential move into this weekly resistance zone. So I'm thinking that if we get into the midpoint of this breakdown candle, look for intraday for those day traders or for those that are swing traders. Look for any type of move, and I don't know if we'll get it, but between 96.30 into that pivot point up to this moving average to the midpoint of this candle is around 96.30. If you do get a rally back up into that resistance, it'll probably offer a little chance for the market to regress back to the downside. So I would be concerned about that, because right now, as you can see from a commitment of trader standpoint, the small speculators are starting to buy this market, and from a seasonal perspective also, we do see a decline in the Canadian dollar. So I think that might be for this week only, an area to focus in on a futures or currency position. That concludes our time, except for I wanted to mention that I know that a lot of people in Canada were asking about this. We offered this special, which was incredible, is our Options Trading Simplified course, and of course our Stock Trading Simplified, combined both to introduce you to what we do for $289. This does expire tonight. So a lot of people didn't have a chance because we had to leave the show early, and my apologies for that, but we did leave the show, and we had to catch a plane back here on Saturday. They didn't have enough information on it, but it's just personsplanet.com/toronto.html. This does expire today. We do have a mentoring class that will come back and talk about this as a bonus in the room, and so to get you familiarized and answer your questions on the course. So I wanted to say, for those that wanted to take advantage of this but did not have a chance to, that were asking questions on how to do it, we didn't have internet, we couldn't run it. We promised you guys we would extend it till Monday night and remind you in planning and scanning. So there it is. So thank you all very much. That concludes our session this morning. When we take a look at what we do in the room, this is our day trading room, which is run by my partner, Butch Heading. You're invited if you would like to stick around. If you are looking at the market from a day-to-day basis, if you have time, stick around this week. We'll also look for you for this week, and since this we'll open our room and our house to you, tomorrow morning I'll come right back in here and we'll go and do a run-through of the scan. So instead of today, it's going to be an opportunity for everyone to be here on Tuesday and with us for this week. So thank you all very much, and that does conclude this morning's planning and scanning.